Welcome to the Top of Mind podcast from Altos Research. This is the show where we talk to real estate industry insiders and experts about the trends shaping the market today. Enjoy the show. Mike Simonsen here. Thanks for joining me today. Welcome to the Top of Mind podcast. This is where I talk to the smartest leaders, thinkers, and doers in the real estate industry. For a few years now, we've been sharing the latest market data every week in our weekly video series from Altos Research. With the new Top of Mind podcast, we're looking to add some context to the discussion about what's happening in the market from leaders in the industry. Each week, of course, Altos Research tracks every home for sale in the country, all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. People desperately need to know what's happening in the housing market right now. The market was frozen so solid last fall. Then suddenly the landscape's changing again. Everyone's really worried about what will happen this year in 2023. So if you need to communicate about this market with your clients, go to altosresearch.com and just book a free consult with our team. We can look at local market and talk about how you can use market data in your business with your buyers and sellers. So speaking of data and informing your clients, the buyers and sellers in this market, I have a terrific guest today, Lisa Sturtevant. Lisa is the chief economist for Bright MLS, which is one of the largest multiple listing services in the country. She's been involved in research on economic, demographic, and housing issues for more than 20 years. Prior to her position at Bright MLS, Lisa was the chief economist for the Virginia Realtors Association. She ran her own consulting firm, LSA Planning, and has served in other research capacities in nonprofit organizations and universities. Lisa has a PhD in public policy from George Mason, a master's in public policy from the University of Maryland, and a BS in mathematical economics from Wake Forest University. Lisa is really one of the top experts on what's happening in the housing market right now. So I'm very excited to talk to her today. Bright MLS covers a huge section of the country, including the DC area and all the mid-Atlantic states. So we'll dive in on those markets a bit too. All right, Lisa, welcome.
Hey, Mike, thanks for having me. I really appreciate it.
That's great. I love to, when we get started, I'm interested in talking market and all of the things going on. But first, tell us about your background a little bit and how you developed your expertise in housing and how you got here.
I sort of love this question. And this idea of becoming interested in housing is so important because it's one of those topics that everybody has an experience with, right? We've all bought a home or rented a place. But I remember I became interested in housing back in grad school when my husband and I were actually buying a home. And I was looking around and we were looking at different types of neighborhoods, different types of homes than our friends were. And we were all demographically pretty similar. So it got me very interested in how and why people make decisions about where to move. And from there, I was able to do a lot of research at George Mason University that sort of looked at housing preferences, frankly, looked at some of the stability in housing preferences over long periods of time in the US, and got me thinking about the economic and demographic factors that not only drive housing, but also how housing is critically important to local and regional economic development, right? The extent to which housing is being more and more thought of as an economic development tool really sort of fueled a lot of the work at George Mason, and the future sort of looking into how housing affordability is actually a constraint, not only for individuals and families, but also for local and regional economies. So all that's to say, like answering questions, love having access to data. And while there's no shortage of data out there for sure, I'm super interested in how to kind of break it down, talk about what's important in the data, and help people, like you mentioned at the top, use data to be a resource for their clients, their colleagues, and really their communities.
Yeah, and serving those realtors to get to the home buyers and sellers really help them right now. Yeah. So housing preferences and stability in those preferences. Tell me about what that means.
Yeah, so I think that's a great question. We talk a lot about housing preferences, and we know that there's been some changes over time, right, in terms of what people prefer. So, for example, we know that in the 50s and 60s, there was a big boon in, living in the suburbs, and people wanted to move out of the cities. And then, in the 90s and 2000s, we heard that there was, an exodus from the cities and then a back to the city movement. And then there were, all sorts of different trends that were getting a lot of attention. At its core, though, you can predict a lot about housing preferences by looking at the incomes and the stage of the life cycle of individuals. And so, as one example, a lot of talk about millennials, for example, being very different than us, me, I'm a Gen Xer. It turns out that millennials are different, but they're different in that they came into their adulthood during the Great Recession. They have a very different financial landscape that they encountered. So they got married later, they had children later, they started their careers later. When they did those things, they made a lot of housing choices that looked very similar to us Gen Xers and those baby boomers who bought the bigger home in the suburbs, in the good school district when children came along. So I got really interested in how those kind of stages of the life cycle actually provide a lot of kind of stability overall in housing preferences, even as there are, of course, shifts in what people, want to buy. And just one other point on that, we always talk about housing preferences, right? But it's really preferences with a constraint. Right? You can prefer to live on the beach in a 11-bedroom mansion, right? But you're constrained by your income. Or you could prefer to live in a great walkable community that also is on a half an acre. But of course you are constrained by what's available. So anyway, I got really interested in sort of people's choices given what, constraints they were facing in the market.
And the much maligned millennial is in that entering their peak home buying years.
Yeah.
Are the preferences really universal, or are there things that we know that are maybe in fact different this time?
I will take the argument that there is more universality in housing preferences than there are differences. And that said, I think there was a big push among baby boomers to move further out to suburban neighborhoods and big single family homes that were separated from commercial activity. And there's been a kind of growing interest in living closer to amenities such as retail and restaurants and commercial activities. But think about that. Isn't that really a return to where we were back in the 40s and 50s, right? Where we lived near stores and near other things. So in some ways, it's just a return to housing preferences that have always sort of been out there. But the sort of mortgage market and federal government policy really encourage suburban living. And so maybe we're just returning back to sort of those more historic preferences that we've seen in the past.
Yeah, I suppose it makes sense that it would be cyclical. It would be moving its waves in and out. Were there things in your research that you found notable about trends in preferences, or things that, like, sometimes we have assumptions about the world that aren't right?
Yeah, well, so my dissertation was actually around the housing preferences of recent immigrants. And one of the things I was really interested in is, I think, and this was sort of an evolution in the 90s and the 2000s, we had this sense that when people were newly arrived to the United States, that they lived in cities, in urban enclaves, right? The Chinatowns, the little Italies of, but it turns out that the sort of most recent wave of immigrants, prior to the pandemic, prior to, the current time, really driven to the suburbs, driven to single family neighborhoods, and really driven to home ownership in a way that native-born residents weren't, willing to combine incomes, to combine family members. So I was really interested in the fact that there was this interest in suburban living among immigrants, who many people often were thinking were living in cities and living, in those ethnic enclaves. It turns out that there was this sort of boom, right, in folks living in non-traditional immigrant gateways when they first arrived in the United States, and that drove a lot of the drive to the cities. There were no established ethnic enclaves in the city. But to your point, that's one of the things I really enjoy about research is, not dispelling myths, but at least, lifting the hood on some of the commonly accepted sort of things we think we know about the housing market and about
or at least confirming our hypotheses,
100%.
right? Like, it turns out this is true. That's really interesting. And my personal experience, I can see, the suburban immigration growth, like the difference between like the town that I grew up in
Mhm.
suburban Chicago, and like the makeup of that population. Now,
Yeah.
those were when I grew up there. It was families that had moved out of the city, and as ethnic as it got was like Polish,
Sure, sure,
like
sure.
or Irish, right? It was
Sure.
like,
Yeah.
and so a very, very different world
Yeah,
now.
yeah.
That's really neat stuff. That's really interesting. Do you have one of the things I like to do on this podcast is talk about the future, and
Okay.
do you have a view of, while we're talking about
Yeah.
immigration and migration patterns, do you
Yep.
have a view of what that looks like for the future?
Yeah, I think there's a couple things, and I think we sort of touched a little bit on immigration, and there's a bigger story, of course, with federal immigration policy and how folks
Yeah,
come
like we
into
don't
this
let
country.
people in anymore.
Well, something like that. There's so immigration and housing is so inextricably tied together, right? One of the reasons why we're not building enough housing is because we can't find enough construction labor, which is very closely tied to Latin American immigration, and that has been slowed down so dramatically. I do think we find that when we do see upticks in immigration, that by and large, new immigrants come to where the jobs are, and in many cases, those are those places that haven't been traditional magnets. So you mentioned Chicago is a long, magnet for immigration, but job growth is in the Southeast and the Southwest and not in Chicago. That's where like a lot of the jobs are. But I think in general, I think there's been like a shift, right, in where people in the country move and even within metro areas move. You mentioned migration, and I'm curious to see, what you're thinking as well. But, we saw a lot of people moving further out during the pandemic when they could work from home and learn from home. And now businesses are calling people back a couple days a week. It's really hard to commute 3 hours a day, if you're trying to go in a couple times a week. And so this question about whether migration patterns that we saw during the pandemic, are those going to stick around? So far, we're seeing a retrenchment a little bit in our market in the Mid-Atlantic. We're seeing kind of a moving back to those first core suburbs, and less demand out in those further exurban, more far-flung kind of Zoom towns.
That's a great segue. So I'm interested in diving in there. So Bright MLS is Mid-Atlantic, covers like what's the total area that you guys cover?
Yeah, so it's 6 states from New Jersey all the way down to Virginia. So New Jersey, Pennsylvania, Delaware, West Virginia, Maryland, the district, and Virginia. So the nice thing is it covers, it's a little microcosm, right, of lots of different kinds of markets. We have high cost markets, we have rural markets. Overall, though, the Mid-Atlantic tends to be a pretty vanilla, for lack of a better word, market. We don't have the wild swings of a Phoenix or a Miami. Relatively stable housing market. But we are seeing those sort of first tier suburbs, which have attracted people, over time. We're starting to see people begin to move back, and demand to be very strong in those markets.
Okay, so first tier suburbs.
Yeah.
You've got some major metros in that area. So first tier suburbs around DC, around Philly. Is that what you're talking about?
Yeah, absolutely. So, and the interesting thing that we're seeing is that imagine who might come to mind if you think about a home buyer in a moving to a suburb of a big city like Philadelphia or DC. They are probably a repeat buyer, right? They're probably a family that's able to roll some equity into the purchase of their next home. And I think in some ways, that's why we're seeing those kinds of markets a little bit stronger now. These folks are a little bit less sensitive to higher mortgage rates because they're able, not compared to a first time buyer, right? Because they're able to roll that equity into their home purchase and sort of, in essence, kind of buy down the rate in some ways. Conversely, where we're seeing slower demand is among those markets that have typically attracted first-time younger buyers, like the cities themselves and the sort of just right outside the city. As you are well aware, first-time buyers very sensitive to mortgage rates, really challenging environment for them. But the suburbs are really doing quite well in terms of buyer activity in our local markets anyway.
That's it. That's really interesting. So how when you say the suburbs are doing well, and
Yeah.
like by what? what mechanism are we measuring here?
Totally, right. I love that question, right? Because people say that all the time. They're like, oh, is it going to be a slower year than last year? Well, what exactly do you mean? Because I
Yeah.
do think, if you're looking at transactions, of course, we're going to be down compared to a year ago. We have to be. Last spring was still very, very busy. Inventory is still a constraint. Mortgage rates are higher. In terms of price growth, we, in our market anyway, in our suburban markets, we never saw, we saw prices come down from their peak levels, but that's mostly a seasonal trend, and we're still seeing prices up 5, 6, 7% year over year in February, in those sort of first tier suburbs, those sort of high demand suburbs. And so that's how I would, at least that's how I'm thinking about like sort of strong
Being
housing
strong.
market.
Right. Right.
Right.
So year over year price, still plenty of year over year price gains
Yeah.
in those towns. It's still supply constrained with, in my, in our data view, it's like, I would describe it as surprising amount of demand given adjustments in, affordability from mortgage rates. But is that roughly what you'd see as well?
Yeah. So, and I know you're the one asking the questions, but I think that, I'd be curious to know what you say, because people do say that. I have my own thoughts on this, but people do say, how can prices still be rising when mortgage rates are double what they were and incomes have gone up, but not by that much. And prices are still rising pretty briskly. And in some ways, the logic is, well, don't prices have to fall if mortgage rates are up at 6.5%, 7%? And I do think that it depends on who you're talking about. And I just think that all that equity that current homeowners have built up in their home is just allowing the market to continue to move forward without those price drops, because people are able to kind of get in with a higher down payment and sort of kind of take a little bit of the edge off those higher rates. But
Yeah.
at least that's what's been happening in our market. We're still seeing pretty stable price growth.
Well, and one observation that we've had is that in a supply constrained market, which we're in,
Mm-hmm.
normally you'd have a relationship between the median home price and the median income. But when you dramatically reduce the number of homes available, you're actually not addressing affordability for the median income. You're only addressing affordability for actually a richer subset of people, like, who can afford it in that time. Like there's fewer homes for sale than and so that, like, there are people who can afford those. So that's one
Yeah.
phenomenon that I try to keep my eye on very closely, and that there are some markets that we can see around the country where inventory has climbed up to pre-pandemic levels, but most of the country, and I think most of the area you cover is true as well, which is the available inventory is still at pandemic lows, like crisis lows, a third of what it might have been in recent years, like really, really few homes available.
Yeah, I think that's right. And I think I'm glad you say that, because we hear a lot, sort of in the media or just sort of reported that inventory is up 30% year over year. It's up 40% year over year. Sure. It's still, as you said, 40% of what we had in 2019, or a third or half or whatever. And it in some ways, I sometimes worry that this sort of conversation about inventory rising year over year kind of diverts attention away from the fact that we still have a structural deficit of housing. And that structural deficit in housing is the primary reason why affordability is such a big challenge, and why first-time homebuyers are particularly challenged. You'd mentioned the sort of inventory, and the folks at the higher end. I think about this a lot. I thought about it a lot during the pandemic. Folks at the higher end of the income spectrum, they have choices. They're the ones that were moving further out to those Zoom towns with their kids and, buying the second home, during the pandemic. But folks at the more moderate income level are, they're not the ones that have choices in the same way. And they're the first ones who are impacted when inventory is so constrained. And I think as a country, it's this idea of, if wealth is being built through home ownership, the extent to which folks are being left out is pretty problematic, I think. And the low inventory is really, the key driver there.
Yeah, and so have you noticed in your region policy shifts, or like we tend to know, I think it seems like in the zeitgeist, we understand that, like, we've done policy that has made it hard for first-time home buyers to buy, made it unaffordable, made it difficult for them to partake in the wealth benefits of home ownership in the U.S. Have you noticed are there any optimistic signs, or are
Right?
we screwed?
No, I think that's right. And I think, we often try and tackle the housing wealth and access to homeownership challenge. We often try and tackle it from the demand side, right? You hear a lot of programs that provide down payment assistance, right? Or that provide a different way to look at credit in order to allow more people to become eligible for mortgages. That's great. But all it does is put more buyers in the market for those ever shrinking number of homes and just bids them up even further. And again, the people with choices, the ones at the higher end, they benefit from that. And so in my experience, in my opinion, is that you have it's a supply side, right? It's a supply side in intervention. And to your point, I mean, the issue is housing doesn't get built because of something the federal government does. By and large, housing doesn't get built because of something the state government does. Housing gets built based on a conversation at a 7 o'clock zoning meeting in your local town, right? And the challenge is that because those decisions are made so locally, local folks are really invested in keeping the status quo and prohibiting more housing from being built. So where we've seen some promising activities are places where this state has come in and intervened in a way that takes that political pressure, frankly, off localities to permit more housing. And then in a place like Arlington County, Virginia, for example, following Minneapolis's kind of lead in this light touch density where single family zoning districts are being amended to allow duplexes and quads and triplexes. And so it's still kind of an open question of whether that's going to have a real impact on affordability because so many people want to live in those very desirable communities. But I do think we're starting to see that localities are understanding that a lack of housing supply is a constraint for their kind of economic well-being and are beginning to make changes to expand zoning to allow more housing.
Yeah, and the people making those local zoning decisions, they have kids too.
100%.
And those kids are, I can't buy in my town. I have to move somewhere else.
It's so interesting. And I do think that's what it's, I spent a lot of time in my career working on housing affordability stuff. And I think that you got to talk to people where they're at, right? It's the sort of heart, head, pocketbook argument of housing affordability. For some people, housing is a right and, everyone should have access to housing they can afford. For others, you have to make the logical case. And that's an example you just gave. Will your kids be able to live in your neighborhood? And then the pocketbook issue. Look, if you want retail and you want restaurants and you want school teachers, you need to have housing that is priced at price points everybody can afford, or else those folks are not going to be in your community. Sorry, we're getting off on the affordability topic here, but I think it's all tied in, right? And it's in this very tight very tight housing market. Supply is really critical to helping to ease those affordability challenges.
Do you, so I love being on the affordability topic. It's an important part of what we're doing here. And do you have a view on investor trends that have contributed or like into that mix of either affordability, inventory?
Yeah. So I think it's interesting because I was just reading the other day that, for example, the National Association of Realtors said 13% of all home sales in 2021 were bought by institutional investors. CoreLogic said 3% of 2021 home sales were bought by institutional investors. But institutional investor, that term gets thrown around and gets vilified, frankly, very, very quickly by folks on the Hill in government and by other folks who want to look for a scapegoat for some of the price growth that we've seen that has really priced folks out. Don't get me wrong. There are some local markets where we have seen large scale portfolio investors come in and buy large swaths of homes, right? And in many cases, they're converting those homes to rentals. I'm of two minds about that. We need rental housing as well, right? And if these are good landlords, and I don't know, but I'm not. That doesn't stress me out as much if folks are maintaining those homes as rental properties. And I do think there are some markets where there are bad actors where it had been harmful to more likely to be low and moderate income folks, where people are coming in and buying up houses. I just worry that the focus on institutional investors takes our eyes off the main culprit, which is really a lack of supply. Because if investors go where there's a good return, right? And if you introduce more supply to the market, that short-term return on that investment wouldn't be as great. And so investors would be looking elsewhere for, returns on there. And you would find less upward pressure on prices. So let's, don't want people to take their eye off the ball, I guess, as it were.
Off the baller. Yeah, it's funny that there are fewer ready-made villains than the hedge fund landlord.
Totally.
Totally. Like, who can we safely vilify in the headlines? So that actually gets to the other side of that investor question is construction, and in your geographies, who's doing construction well?
Yeah, no, that's a great question. It's funny. You talk about who's easy to vilify. It used to be you vilify the home builders, right? The home builders were just gouging us and everything. And it's interesting to watch the home builders react to the current slowdown in the housing market. I think they learned a lot of lessons from the Great Recession, where frankly, builders were building right up till we dropped off the precipice of the housing market in 2006. And now we saw a lot of pullback in new construction. And we saw in our market, and it's probably around the country, after the Great Recession, we saw a lot of consolidation in the home building industry. We saw a lot of the local smaller guys and girls go out of business. And now we're left with a lot of national home builders in our market that are able to weather these kinds of cyclical moments a little bit better. We do have a fair amount of new construction still going on in a lot of our markets, particularly in Sussex County, Delaware, for example, is this like market that's halfway between Baltimore and DC and is still seeing quite a bit of new home construction. And that's really where we're seeing most of our new home construction is really in those kind of third tiers out from the metropolitan area, where frankly there's more greenfield development possible. I will say, though, we have in the Washington area actually been seeing quite a bit of multifamily construction on the rental side, which is playing out really interestingly because oftentimes a first-time home buyer in our market is looking at a condo, and maybe now that there's a kind of a lot of rental housing coming onto the market, we're actually seeing rents begin to moderate a little bit. And so renting for longer is actually becoming a better deal for some first-time buyers in our local market, simply because of the increase in supply of rental housing that has come online in recent months.
Renting for longer, meaning like my payments are just a lot less if I'm renting rather than if I were to buy.
Well, at this point, right? And there's also, they're getting 2 months free rent and they're getting free parking. And then landlords know that, or property managers are seeing that there's a lot more competition because there is so much new product coming online that relatively speaking, it's in some local markets in our region, it's not bad. It's not a bad time to be a renter.
That's interesting. Yeah, not a bad time to be a renter. I mean, I live in San Francisco, and it's true
Right?
there too.
Yeah.
Great. So let's shift gears.
Yeah.
Let's shift gears into talking about the broader economy and your view about, we're in inflation, we're in recession, we're in like all of these things going on. What's your view on the economy for this year? Where do the risks lie? How are you looking at things when you're talking, especially when you're talking with, our constituents out there, the home buyers and sellers? What are you thinking about?
Look, this is a very unusual time, right? What I will say is, if anybody is out there trying to tell you that they know exactly where the economy is going in 2023, I would take it all with a grain of salt, right? Because I think we're in such uncharted territory where, we have been seeing a lot of positive signs in the economy, right? What are we at? 517,000 jobs added in January. Unemployment is lower than it's been since 1969. I mean, this is a very tight labor market by those traditional measures. At the same time, you're seeing high profile layoffs, right, in the media every day. And honestly, those seem to be still pretty focused on the tech side and frankly, unfortunately for our industry, a little bit on the mortgage side. And then we saw inflation had been falling, but it didn't fall by as much as folks had thought, right? I do think we're in this period of kind of start and stop. And I think we need to stop thinking about a soft landing in terms of the economy. We hear that about a lot. Can the Fed bring it in for a soft landing? I heard another sort of airline, sort of motif is this sort of touch and go. This sort of, I think we're going to touch down and come up and touch down and come up. And I think it's going to be really bumpy until we get to sort of a period of economic stability. So I think it's going to be a period of economic uncertainty here for the first half of the year. And I think that's going to hold some businesses and consumers back for sure. But if I were to speak directly to someone who is thinking about whether I should go buy a home at this point, I think one thing I would caution against is I think it's a bad idea to try and time this stuff. You know what I mean? And what I mean by that is I think it's a bad idea to try and say, well, if I wait, I might have a lower interest rate. And well, sure, you might also have less to choose from. And so if it is the right time for you and your family to purchase a home and you have the financial wherewithal to do so, I fear people are trying to time things that are just impossible to time at this point. I don't know. That's my 2 cents.
Yeah, that's roughly the way it comes to me too.
Yeah.
I had somebody on Twitter today say, "Well, what should I do about
Right.
timing?" And first of all, I don't know where mortgage rates are going. I have no idea.
Right.
But secondly, the way I phrase it is like it's like, look, if you love the house
Yeah.
and you can afford the house,
Yeah.
buy the house.
Yeah.
If you don't love it or you can't afford it, don't buy it. Don't buy it because you think you have to, or you think the timing is going to get worse, or like just like if buy the house, live in the house.
Right.
Markets go up and down, and it's like I've given that all the way up and on the way down as well, the same sort of view.
I think that's absolutely right. I think we've lost a little bit of sight sometimes, I think, in the fact that, housing is a place to live. It is also an investment, right? It's also a financial investment. But at the end of the day, if you're looking to buy a home to live in for 5, 7, 10 years, I feel like there's so much to worry about in the transaction, but whether you're timing it exactly right to get the best interest rate you can get and the best price you can get at this moment, I feel like is an added stress that a prospective home buyer doesn't need to put on themselves.
Yeah, right. And if you happen to time it right, it's pure luck as opposed to skill.
Right. Well, I'll be as a personal anecdote. My husband and I purchased a home. Remember when mortgage rates might hit 7%? Guess who was putting an offer on a home right back then? So we closed on December 2nd.
Like last fall, 7%.
Yeah.
Right
when nobody was buying home. We closed on the December 2nd on this home. And it was one of those things that it sort of like highlighted to me that, because people would ask me, why isn't the market slowing even more, right? Why aren't even more buyers pulling back? Because there's always people who will decide it is the right time. It is the house they love. It is, the time to make that choice. And if financially it works out, they're going to do it. Yeah, for sure.
Interesting. Well, that's good to know. It's always good to where the skeptical consumer is out there saying, well, you want me to buy, but what are you doing? You're like, well, I'm buying. It's time for me to buy too.
We did it too.
Yeah. Good for you. Well, congrats on the new home. One of the things that I'm interested in the MLS side of things is we have had there's a common perception in the industry about the number of realtors that should exist, or we have too many, or there's 2 million realtors and 5 million homes that sell in a year. So can you tell me about what's going on with the folks in is that growing now? Is it shrinking, the number of realtors with Bright MLS?
Yeah, that's a great question. So we have about 100,000 subscribers across our footprint. So that's 100,000 brokers and agents working in those 6 states and DC. And we did see more people enter the real estate industry like we did nationally, right, during the pandemic. And we are starting to see some of those numbers come down at some firms where real estate agents who became agents during the pandemic, maybe it came in as a part-time basis, are finding that, now and we see that kind of turnover after like 2 years or so pretty often, but we're seeing a little bit more of it now as the longer term real estate agents and brokers who have been in the market for a long term are a little bit more successful, right, in these more challenging housing markets. And we are seeing, then we expect our subscriber base to shrink in 2022. It's a little bit of a lagging thing, right? Because they get their license, and then why not just you stay a member while you have your license?
Well, you have your
But I do think that it's tricky, right? When you have nationally over over 1 million real estate agents or realtors, but you have something like 800,000 homes available for sale. Like that is that's not a good industry to be in if you want to make any money, because you're competing you're competing with a lot of people to list and sell homes. So I do think there's a rebalancing that's going on here after we kind of come out of the pandemic. And I think it'll be interesting, though, to see if we do go into a recession, if we do find that there's a downturn. We know that people enter the real estate industry during economic recessions because they may lose a job, and then they can go get their license, and then they can find a firm to join. That has happened in past recessions, and I wonder if we do enter a recession, if we might see the number of agents more stable than we might otherwise think, because people are making that move from a full-time W-2 job to a real estate agent job.
That's an interesting insight. I wasn't aware of that the number of agents grows during recessions, but it makes sense.
Yeah.
I have a hypothesis about the number of realtors, and that because it's relatively easy to get licensed and then to let it lapse, it's actually a really great example of an efficient market. And so, like, the number of realtors we have is always the right number.
That's interesting.
That's my view. It's like it's always exactly the right number. And like when the market's hotter and there's more going on and there's more commissions and more people come in, and as soon as then they leave. And so, like, I like to say we always have the perfect number of maybe a little lag.
No, but that's really interesting, because you're right. Like, if you are a rational individual and you're in the real estate business and you're not making any money, as you're saying, entry and exit into the industry is relatively painless. I think that what I've seen is that the folks who've worked in the industry for a long time have really been focusing on sort of getting people up to speed on professionalism, making sure that, all the transactions are still happening, in a way that is, good for the consumer. And that's a little trickier when you have a lot of flow in and out, to kind of make sure people are, sort of staying on top.
Right. It is still an expertise business, 100%. And that's the reason. And therefore it makes sense to have somebody with expertise as opposed to 100%. Just brand new.
Yep. 100%. So so we're seeing the same thing in our market. We're probably seeing a little bit of shrinkage in the number of real estate agents and brokers.
Yeah. That's great. Are there, do you have views about inflation this year and how we should think about it? Like it looked like it was coming down, but then the economy's been so strong that those has been hitting. Do you have views about where they might, how we might, like, what might happen and how it might impact our industry the rest of this year?
Yeah, no, I have a couple of thoughts, and I don't know exactly, right? Of course, but I think we saw that. Have you ever been on a diet, Mike? I'm sure you haven't, but if you know when you're on a diet, or even when you're starting an exercise program, the first few pounds are really easy, right? Those are the ones that's easy. And I think that what we've done is we've worked through some of the supply chain induced inflation, and that went pretty well. And that was a lot of luck in some ways. And there was also some policy, of course, and the Federal Reserve's rate hikes. And so we went from 9% inflation down to 6.4% inflation, seeing a lot of decline in goods inflation and a lot of deflation in energy prices, which is, again, outside of the Federal Reserve's realm. It's the services inflation that is now on the rise. And I think that's going to be a harder nut to crack, right? And we're sort of seeing that the cost of health services and personal services and airline tickets and things like that which are still rising relatively quickly, will keep inflation a little bit high. On the flip side, though, I think there's a really technical point of inflation in how housing is accounted for inflation, right? We know that housing makes up usually about 40% of overall inflation. And we know that the way in which rent, for example, is entered into the inflation calculation is lagging, because it has to do with when people we see rent inflation up when people renew their leases. You don't get a rent increase if you've got a lease. And so, we've started to see those new leases, start to come in a little bit lower. And so we'll start to see those housing costs reflected in lower inflation, and that might offset some of the services. But I do think that as a consumer, so back to the consumer, some things are going to be a little less expensive than they were, but I think inflation is still going to be top of mind of many people. And I think it's going to be important to see if wages continue to go up. We always think wage growth is good, but that's also a sign that we're likely to see prices stay high and inflation to stay high. And so I think back to your original question, what does inflation mean for our business? I think it's definitely something we should be watching, and I would watch it in tandem with what we're seeing about credit card debt, for example, and spending. And we're seeing that people are beginning to run up credit cards, and credit card debt levels are rising again. And we know the student loan deferment program is going to end here coming up in the spring. And so people are having to take another look at their household budgets, and may think, gosh, we thought we were going to be able to get out there and buy a home this year, but inflation prices are still too high. I'm not getting as big a wage increase as I thought. And I think that is one of I still think inflation is one of the risks out there to the buyer side of the housing market.
So if we were to look at the risks for the coming year, recession versus inflation.
Yeah, man. I don't know. I think it's good. Like last year, I feel like was like kind of a tale of 2 years, right? We had the first half of the year where everything was really a boom, and then we had like the second half of the year where stuff slowed down. I'm kind of gonna bet on a tale of two years this year as well. I think we're still going to see inflation be kind of front of mind in the first half of the year. I think there is a potential, though, for us to find that as the interest rate hikes take their toll, that by the end of next year, we will start to see a softening in the overall economy. And so while prices might have fallen, we might start to see overall economic growth begin to slow down into sort of recessionary levels. So look, if you want something to worry about this year, I think there's going to be plenty for everyone. And I do think inflation is going to be sort of the short-term kind of top of mind issue for folks who are out there.
Inflation short term, and
perhaps
recession risk next year.
Soft recession risk at the end of the year into 2024.
Okay.
We'll check back in a few months. We'll see.
Yeah, for sure. It's great. The best thing about making predictions like this is nobody holds you to them.
That's right.
So I love to hear. What I like to do is really, I'm interested in your thinking about it. Like, how do you approach it? Because, who knows if it happens, but what are the elements that are important to you? That's really what is valuable to me in these discussions. So I appreciate it.
Yeah.
Let's do a little turn. We got a few minutes left. George Mason University, where you did your PhD, has a really powerful economics program. One of the most notable ones in the country these days. Tell me about that experience at that school.
Yeah. So, and I will say I wasn't in the economics department. I was in the public policy school, but what I appreciate about George Mason's approach to economics and to research more generally is sort of the interdisciplinary approach to it, right? We were located in, my school was located right, in the heart of the Washington metropolitan area, right outside of DC. So understanding the ways in which, policy and economics intersect. I think the idea of being able to use the Washington area as a lab, basically, for research is really, it's really an interesting place, because in some ways the Washington area is like, let's say, a Chicago or a Seattle or lots of other places. But then on the flip side, we're also, we're 3 states plus the District of Columbia, if you throw West Virginia in there, because we go into West Virginia. And so when you're thinking about, we were talking about housing policy, for example, and you can think about researching sort of the economics behind housing policy and the housing economy. But it differs whether you're in Maryland or Virginia, or whether you're in the district or West Virginia, because that local influence on housing is really, critical, and is what we really were able to focus on at George Mason when, sort of you can take the macro look at things, but at the end of the day, what goes on at the local level ends up being, almost, I would argue, more important when it comes to the housing supply and demand picture. I was also fortunate enough to be on the faculty of George Mason for a little while, and I got to teach statistics Thursday nights at 7:30 at night for 3 hours. But this idea of being able to use data, use analysis to answer questions, it was just like such a great opportunity, great experience that I was able to have there.
I love it. Yeah, that DC metro area has a really diverse set of policies to pay attention to. When you're studying policy, that turns out to be really, really interesting. I can imagine.
Yep, absolutely.
Cool. Let's talk about the longer term future. We've talked about demographics and migration and immigration a little bit, but let's talk, later in the decade.
Okay.
Housing and what you see, we have migration patterns, and in the Mid-Atlantic, you actually kind of have both. You have a little bit of inbound migration, and you have some of the the migration, the New Jersey, Pennsylvania down to Florida, like out migration there.
Yep.
So tell me about the next 10 years, or what your vision of the future is, or things we should pay attention to.
Yeah, so I think, I know we touched on demographics before, but I don't think you can overstate the importance of demographics to the longer term outlook for the housing market. I think that we are going to be in a low inventory, high demand market through the rest of this decade. So we're in 2023 right now. You mentioned the millennials earlier. They are between the ages of 27 and 42 right now. Median first-time homebuyer age 33, 34. We've got them for another 7 years, right, in this prime first-time homebuying age. On the other end of the barbell, you've got the baby boomers who are remaining in their homes longer, locking down inventory, keeping inventory tight. It's hard to be delicate about, but over the next 7-8 years, those folks will, move into senior housing, or will sort of, move on to a better place or whatever. And so in 2030, when we see, Generation Alpha coming up, smaller than the millennials, we see Gen Xers, sort of, those will be the drivers in the market, and we'll have a much more inventory favorable market in the 2030s. I think it's going to be easier to be a first-time home buyer in the 2030s than it is now. And then the only other thing I'll say, and I think that I'm really fascinated by, and I don't know the answer to, is I do think there's been this shift and back to the supply issue in how we deliver housing. If building new housing is the primary solution to tackling the housing affordability challenge, we need to find a different way to build housing, because we've been building housing about the same way for like 100 years, right? You clear a site, you put the house up, and there's been a lot of movement on manufactured housing and building homes offsite and moving them in, and this crazy 3D printing stuff. And I'm not sure what has legs at scale, but I do think that's going to be one defining characteristic of the housing market for the latter part of this decade, is that maybe we're thinking about how housing gets constructed in a different way so that we can kind of have a new solution to expanding the housing supply. So those are the things I'm kind of excited about, and that I honestly am looking forward to learning more about over the years ahead.
The sort of a techno-optimist view of what we can do to improve housing, and like technology comes in to improve building. Do you think like reduce cost? And one of our challenges right now is it's hard to affordably build affordable, homes.
Totally. Yeah, I think materials cost is key, but I'm going to argue there's two even more important costs that I think we're looking to find solutions for. And the first is back to that zoning meeting in your local town at 7 p.m., right? We know from the home builders that local and state regulation accounts for between 30 and 40% of the total cost of building a new home. That is a huge opportunity to cut costs by reducing the time it takes to get permits, by limiting the number of sort of public meetings that are involved in building housing. The second thing, though, that I'm really excited to think about is on the labor side, which we also touched on. And we know that there has been a real shortfall in the number of folks who are going into the trades, right? That are going and learning about becoming an electrician or a plumber or a sheet metal worker. And couple that with all of the trends in accumulating student college debt and people going to college and then not being able to get a job that pays enough to pay off their debt. I'm hoping and I'm wondering if there's going to be a pivot to encourage more vocational training, encourage more students to go into the trades. And I think that will be good for the economy. I also think it'll be good for the home building sector to bring down the cost of labor by not bring down the cost of labor, by bringing more people into the labor force in order to build more housing. So I think materials important for sure. And I also think the labor and local state regulation piece is also critical to bringing down the price of building new housing.
Yeah, that's terrific. I hadn't known that the estimate that 30 to 40% of the cost is essentially a local zoning permitting process cost.
And it could be, state and local. It could also be things having to do with environmental protection and things, with, putting in life and safety stuff. I mean, I'm not saying it's all bad for sure, and neither would the home builders. But they are saying that there are places where costs can be cut, and regulation and the processes are definitely one place that needs to be examined.
Yeah, I mean, there are reasons that we put these zoning laws in place. Like there are things that we're trying to solve for. But it does seem like there is a significant opportunity for cost savings if we can do pull some of the inefficiencies out of that mix.
Absolutely.
And you mentioned a little bit in I think Virginia about taking some of that political pressure out of the local hands and putting it at the state level. That's happening in California too, where it is it's like state levels. The state recognizes that there is crisis affordability and availability problems in California, and you get like there's literally a city council person in San Francisco. Who literally said, we're all in favor of affordable housing. We just don't want it in our neighborhood. It literally said, not in my backyard. and it's like, how do we get over those hurdles?
Yeah, no, I think that is the biggest challenge, and it's not an easy nut to crack. But I do think that, like we talked about earlier, I think there is some awareness that something has to change, or it's not just going to be like a thing where it's somebody else. I think that's part of the problem is for that city council member you mentioned, or for many people, it's, well, that's, I don't know anybody who has trouble affording their home. But once it hits home, whether it's your adult children or then it's, oh, well, I see this is hitting more broadly. My kid's teacher, for example, or, and so I think there's growing movement to understand that, I might not know as much about what it means to have some type of housing that's more affordable in my neighborhood. Let me learn a little bit more about it.
Well, I really appreciate the conversation today, Lisa. This is exactly where we want to go and dive into your expertise. And so I appreciate it very much. Yeah. Where can folks follow you and work you're publishing and work you're doing with Bright MLS? Yeah,
no, I really appreciate that. And Mike, thanks so much for the chance to join you. I love following what Altos puts out, and I watch all your data. You can check out Bright's data at brightmls.com/research. And please do follow me on Twitter and LinkedIn. It's just Lisa_Sturtevant on both those platforms. And again, thanks so much. I really enjoyed the conversation. I'm glad we had an opportunity to talk everything from new construction to housing affordability to demographics. It was great.
Perfect. So brightmls.com/research, and then Lisa_Sturtevant on Twitter and LinkedIn are both good places for you.
Yep. Sounds good.
Terrific. Lisa, thank you so much.
Yep. Thanks, Mike. Appreciate it.
All right, everybody. This is the Top of Mind podcast. We'll be back in another week or so with another great guests like Lisa. Thanks for listening to Top of Mind. If you enjoyed the show, I'd really appreciate leaving a nice review on your favorite podcast app. That helps other people find us as well. Be sure to subscribe so you don't miss future episodes. See you soon.